Hey there, it's Ryan Skaggs. Welcome to the Mortgage Minute. So I've got some updates. It's late January 2021. We had a Fed meeting this past week, and I want to tell you what is going on in the market. So before we get into the update, hit that like button, hit that subscribe, leave your comments below. I would be forever grateful. So Freddie Mac puts the average 30-year fixed at 2.73. Our absolute low is January 7th, where we're at 2.65. So we're up just a little bit, not crazy high, but we've definitely seen that kind of bottom trough, and we've seen rates slightly trend upwards over the last few weeks, mid-January, late January. So it's not like the refi spigot here is turned off. There's still great opportunity for purchasing and locking in that low rate, or for people that potentially have not refinanced yet. And if you want to check out the Freddie Mac link, look below in the description. So one of the things I wanted to really talk about today was how to be prepared for a hot market in the Chicagoland North Shore market. My backyard, there are properties going with 2, 3, 4, 7 offers going against these properties. So how do you put yourself in best position? You have to get your finances in order. Talk with a lender. Hopefully that's me. But with that said, talk to your lender. Get the documentation over in terms of income, basics. They can get a lot done up front if you provide some documentation. The days of just like going online and getting a quick letter and then expecting to compete with 7 different offers, on a property, absolutely not. You're setting yourself up for failure. Your expectations are so misaligned with where this market is. You need to have a solid pre-approval. You need to have documentation in hand. Again, this is a suggestion. This is my recommendation. If you want to go online to one of those online lenders and just type in some information and think that that's going to give you the best shot, more power to you. But in my business, in my world, and what I'm talking with my clients about and referral sources is that it's so important to get out in front of that. Trying to do a pre-approval super rushed or whatever else, it's just not going to set yourself up for success. We're seeing the average days on market shrinking. We're not seeing a lot of new inventory coming on, even though typically right around the Super Bowl, this would be the time when we're starting to get some of those new properties onto the market. So time will tell if we see that start to balance out. I'll give you a quick example to end is that, you remember like in April, when you would go to shop for toilet paper, you had to go to like 3 different places, 4 different places. It was incredibly hard. You had to stand in line. The supply was very, very low and demand was very, very high. Now apply that to today's real estate market. That's a little bit what it's like. So when you're prepared and walking into it open-eyed and ready for a market like that, it's not that you have to overpay. It's just that you have to be ready, and those properties are moving very, very quickly. So last but not least, the Fed had their meeting this past week, really status quo, so not a big real headlines or page turner. One thing that I'm going to be looking at is their 2-day Fed meeting in March. They're going to absolutely have to recap 2020 and what they see moving forward in that March statement or their comments. They're going to likely talk about when they're going to raise the Fed funds rate or when they're going to possibly see rates move up. Is that 2023? Is that 2024? Is that sooner? That is going to be a significant meeting, so mark that on your calendar. If you want to check out past videos in terms of, hey, what is my take on where the Biden administration, might go with real estate, with interest, or with interest rates, check out that video. But again, thank you so much for tuning into the Mortgage Minute. Have a great day. Be safe, be healthy, and we'll see each other again very, very soon.